DraftKings stock is one of the most popular in the entire market, and it's also one of the most heavily requested from you guys that I do a review video on. So that's exactly what we're going to do in today's video. We're talking all about DraftKings stock. Let's get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. By the way, let me know down below if there are any other stocks you want me to do a review video on. I'm always looking for suggestions on what type of topics would be the most popular things that you guys want to see for my next video. But with that said, let's go back into DraftKings here. Now this is of course mostly an online sports betting company, and they've been red hot ever since IPOing back in 2020, at least in terms of popularity. Now the stock, that's been extremely volatile ever since, and it's definitely gone through a lot of ups and downs, but more recently, just like most other spec stocks in the market, DraftKings stock has been crashing by huge amounts. So let's take a closer look at the business. We'll take a look at what they do, some of the pros and cons. Let's talk about why the stock has been up and down, and of course, I'll let you know if I plan to buy this stock myself anytime soon. Let's jump into it. Okay, now just a really quick background on DraftKings in case you're not too familiar with them. They operate primarily as an online sports betting and fantasy contest platform. So you can basically bet on sporting events like UFC fights or football games like the Super Bowl and so on. You get the idea. Plus, they also have two other parts of their business that have to do with casino-like gambling, as well as various fantasy games, contests, and competitions to win various prizes, some of which are actually legal in states where online gambling is still prohibited. So that's one of the ways that they've kind of tried to diversify and make up for the states where their gambling platforms are still not, quite legal. The reason why investors are so crazy about DraftKings though is because offering the convenience of gambling online through your mobile phone, where you can place a bet on a baseball game within seconds compared to having to drive all the way down to a physical casino, well, that is a huge proposition to consumers. It also means that DraftKings would one day generate giant profits, since they'd be benefiting from casino-like profitability without any of the overhead costs, like having to build those massive resorts with hundreds of employees just to attract customers. Now you can just do it all right from your phone. That's huge convenience, and it's way easier, and you'd have much better margins as a company. And when talking about the opportunity here, I mean, just looking at sports betting alone, well, you're talking about a gigantic market worth over $200 billion. For context, DraftKings only did about $1 billion last year, and that's including all the parts of their business put together. However, the gambling market has historically been dominated by casinos that essentially ran a monopoly on it, especially here in the States, where it was actually federal law that most sports gambling had to be done in the state of Nevada, which has the highest concentration of casinos. However, the market started getting disrupted around 2017 when the Supreme Court overturned that federal law and opened up sports gambling to the rest of the country and left it up to the states to legalize it. And ever since that ruling, we've seen a dramatic rise in approval of sports gambling across the country, with the majority of Americans now saying that they want the right to be able to bet on sports, online too. As a result, many states have begun legalizing it in recent years. However, to this day, DraftKings full suite of services are only available in 17 states, which are the green ones that you see on this map. Now that's definitely a fantastic start, and it includes a couple powerhouses like the massive market of New York, which so far has led to tremendous growth for DraftKings, with sales climbing from around $300 million in 2019 to well over $1 billion last year, basically quadrupling in just a couple years. However, key markets that are also massively large are still missing, like Florida, for example, where online sports betting was actually briefly passed in November of last year, but just 3 weeks after, the Indian tribe that controls in-person gambling in the state was able to get the ruling overturned, and there's no scheduled resolution talks until sometime next year. Texas is also a giant market who had multiple bills proposed last year for legalizing sports betting, but unfortunately none of them got passed. The Texas legislature meets every 2 years though, so the hope is that it gets passed next year. And of course, there's also California, who is by far the richest state in the country, and they have two separate bills on the ballot for this upcoming November election that could legalize sports betting. However, those two bills differ in very significant ways. The first bill is actually supported by Indian tribes that would only legalize sports betting inside of their own casinos, while the second bill is supported by online third parties like DraftKings because it would legalize it across the board. Regardless of when these states finally approve it, though, the point is that there is still a lot of future growth potential to be had, especially in those three states, since they make up by far the largest populations in the entire country and they're still not legalized. Each of those would have giant implications for DraftKings, which, by the way, I would argue that DraftKings has also done a better job than any other gambling site out there in terms of branding and awareness. I've seen commercials on Joe Rogan's podcast, which is the largest in the entire world. They've constantly sponsored UFC fights, which is the fastest growing sport in the world. There's partnerships with Jerry Rice, who did commercials for them during the NFL playoffs, and even Michael Jordan invested in DraftKings himself and is an advisor to the board of directors. And all of these positives initially sent the stock skyrocketing from around $20 a share at IPO to almost $75 at its highest point. However, from there, it has all been downhill as DraftKings has now crashed by around 80%, all the way back down to the mid-teens today, which is even lower than the IPO price. So the question is, why did it crash? And is now a good time to buy after the huge drop? Well, there's a couple obvious reasons for the crash, but the ones that really stick out the most are that, first of all, growth is slowing down. In 2020, sales growth increased to 90%, and in 2021, they jumped even more to over 100% growth. But this year, that growth is falling all the way down to around 60%, and then that's expected to drop even more to around 30% next year as well. Now, obviously, that's still pretty good growth, and part of the reason why it's lower is because it's a really hard comparison to the prior monster years. But it's also because of a deteriorating economy that is already in recession and is expected to go into an even bigger recession next year. As a result, the Nasdaq is literally in a bear market, and highly valued tech stocks like DraftKings have been getting absolutely crushed, especially if they're not profitable, given the high inflation that makes a company's cash worth even less, and the sharply rising interest rates that make it even more expensive to borrow money. So if you're not profitable in this type of environment, well, your stock is going to get destroyed. And that's exactly what we've been seeing, which in the case of DraftKings, I mean, you're talking about giant losses that even surpass their own sales. In 2020, for example, they did over $600 million in sales, but net income came in at an even bigger loss of over $1.2 billion. That's like double the loss in net income compared to revenue. 2021 was a much better comparison because of the rise in sales to $1.3 billion, but it was still an even bigger loss on the bottom line of over $1.5 billion. And the losses are expected to continue when you look at analyst estimates. Earnings per share came in at negative $3.78 last year, and while that is expected to improve a bit in each of the next 2 years, it's still bigger losses expected than they even saw 4 years prior, and it's moving at a very slow rate. Even if it's improving, it's still taking some time. I mean, at this pace, you're probably not going to see DraftKings turn a profit for several more years to come. And a large reason for that is because of not only rising competition, since there isn't really a huge barrier to entry for placing online bets, but it's also because that strong competition means that DraftKings will have to continuously spend giant amounts of money on sales and marketing and various bonus offerings in order to convince players to use their platform. So for example, they might offer they'll match your bet of $100 or something like that. And all the celebrities that they've been using, those also don't come cheap. So the result is continuing losses that will take a while to overcome. And if that's the case, then are you sure you want to own this type of stock during such a horrible, macro environment? Well, I would argue that one of the positives is that at least the stock has crashed by so much already that it's getting a bit cheaper, and that's helping minimize the risk a little. I mean, you got to consider the price to sales ratio used to be higher than 50, but it's now fallen all the way down to just around 4 today. And if you're able to generate some high revenue growth rates of around 50% or more per year, and especially when giant markets like California or Texas open up, and you might even see some surprise growth years of like triple digit percentages, well, that PS ratio can drop down closer to 1, which is what we generally consider to be a good, of good value of a PS ratio. It can get much closer to 1 a lot faster than you might expect. So it's already relatively cheap compared to its history, and it could get a lot closer to just what we generally consider to be a good value as well, if they can execute and if things start to improve and they're able to generate some high revenue growth. However, ultimately, there are still just a couple reasons why I just cannot convince myself to pull the trigger on DraftKings stock. Now, the positives are that it can become very profitable long term if it operates like a digital casino. And I think that that is a market that will very likely expand and grow much larger over the long term too. So there's plenty of potential for them to be had. But the risks are that they generate huge losses, which I don't think is going to come down, anytime soon. There's rising competition. They're going to have to continue to spend super heavy on marketing and sales. And at the same time, they're operating in a horrible macro economy. I really feel like DraftKings is the type of stock that can really skyrocket and soar during a good economy or during a bull market in the stock market. But during this kind of macro environment, it's not really great for these type of spec stocks. And by the way, all the meanwhile, there is this lingering threat or this lingering risk of government regulation. The government can step in at any time and just ban some of the practices that DraftKings performs, and at which point they could completely destroy a company like DraftKings in just a matter of days. Remember what happened to online poker? That used to be all the rave. I used to play it all the time myself, and then in just a very short amount of time, it disappeared, and many of those companies got completely destroyed. And I don't think that that's going to happen here. I really do think that we're heading towards a future where online gambling does become more legalized over time, but it is still a lingering risk that is kind of there, and you should be aware of it. Ultimately, DraftKings stock, it is one that I really like. I really wish I could be an investor, and I'm going to keep a very close eye on it, and I may even invest in them in the future if the macro environment improves or if they start to see huge improvements within their own business. There's different factors that could persuade me to definitely take a chance on DraftKings. But at the moment, I think that there are other speculative stocks out there that have just as much reward potential as DraftKings that have been absolutely destroyed in this environment, but that have significantly lower risk. And I've made tons of recent videos talking about which stocks I like and which stocks I've been putting the speculative portion of my budget towards on those stocks. So that's just how I feel though, guys. It's not the perfect fit for me at this moment, but what do you guys think? Are you invested in DraftKings? Are you thinking about buying it? I would love to hear your thoughts down below. I'll try to respond to as many as I can, but thank you so much for stopping by, and I will catch you in the next video. Take care. Bye-bye.